Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. We are recording a Friday night edition. It's Friday, the 17th of June. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. How are you, Barrie? How was your week?
It was a good week. So what can I say?
Yeah, I had a crazy week. I was at my son's graduation the first part of the week. I come back, a cable gets cut, and I got no internet for 3 days. What a week.
Yeah, well, we get those. It's
Yeah,
forced holiday, forced time off.
that's right. Anyway, it was not a Bitcoin certainly didn't take the week off. We've been talking about Bitcoin for months and months now, and how it was bearishly formed, and that ultimately these lows from last year were going to get taken out. And we've seen the declines, the consolidations and counter trends have been mainly sideways. And here we had this essentially month and a half triangle and congestion that broke in a big way to the downside.
Right.
We took out the full square here, which is in the, call it, 24,500, 24.6 area. We took that out convincingly, and now we're, heading down towards what looks like the half square, which is around, 15,750. And if we lose that, I mean, again, this is not anything other than just going where the geometry is. You're looking about 7,000 if we get down to the full square. Until we start, stopping and resting on top of these important markers and clearing them on looking at the upside, the weight of the evidence suggests that, Bitcoin's going to the half square. If we lose the new half square, we're going to complete the full square. It is not a pretty picture in crypto land until we see the kind of price actions which show we can get on top and sit on top of the full square or this half square up here. Crypto looks really, really heavy. Anything else you have to add here on this? I know you and I have been fairly in sync on this.
Yeah, well, we've been bearish, and I just wanted to call out that we were watching that apex to see if it breaks that apex, it was going to go. That was sort of our trigger that we were watching, and that's exactly what happened. And it sitting on top was okay, but it really didn't move, and we called that out. And the key to the break was lost the apex, and there it was.
And it was violent. I mean, and this is a good lesson. We'd always try and look at things that happen in price patterns and then take note of it, right? This apex, anytime you're looking at a triangle, the apex is critical, right? It's bullish above it and it's bearish below it. And when it goes sideways, this is building up of energy, and this here is the release of that energy. We saw it in the ES, and which you're going to cover in a second. We saw that in spades last week. Once that big triangle broke, man, the energy that was released was really, really impressive. So with that, let me throw it over to you. Let's cover the big five. When you come back to me, again, the commodities, if you watch our monthly show, the commodities are really bullish longer term on the monthlies. But on the dailies and the shorter time frames that we look at and we try to focus on this weekly show to give you actionable ideas, most of them are consolidating or correcting. This week, I wanted to highlight two, which are, showing evidence of higher lows, and there's a potential for a good bullish break higher in coffee and corn, and we'll cover those in addition to the NQs. But everything else in commodity land is, continuing their consolidations and corrections and frustrating both the bulls and the bears. But bigger picture, they're still, and we're still very bullish on them. So let me kick it over to you, and then we'll come back and do those two commodities really quickly. There's that energy release we were talking about.
Building up here, had to be patient.
Man, that was like how many days was that? Like 10 days.
Well, it
8
was 2
days.
weeks. Yeah.
Yeah.
About 2 weeks.
But look at the energy you get coming out of that kind of formation.
That's right. That's right. And that's why you keep your powder dry.
And you wait for the break, right? Trying to
Mm.
trade in that chop just kills you.
Now that we got the break, let's go back and just review what we talked about last time. It was a short segment last time, but we did spend some time on the S&P. And we spoke about the bracket here. We had that 169, and basically where the square of 90 was, that was sort of the low, right? And this was the buffer that we had. We had to kind of hold above that little box. And if it broke it, we were just probably going to slide lower. Now, if we were able to manage to hold above it somehow, even after testing these other two lows here, we're probably going to go higher and test this 4260 or even higher. So, and we left it off by saying the way you look to see the break is you look for a lower time frame to start making lower lows or lower highs. Well, here it was a triangle, so it's a little bit of a trick, right? Okay, so triangle, you can just draw the trend lines and wait for the break. But just to go back and cover what we talked about, if we so here's the 4-hour chart that I've used to post, when all these lines were active. But anyway, some of you guys might be familiar with the chart. And I had this circle drawn in a while back. I'm just going to leave it there, not for anything special. But what I want to show was how the lower highs came in, and that's the key thing. So we were building up this triangle here, but you can see how the highs were lower and lower and lower and lower, right? We got 0 here, 0 high, 1, 2, 3, 4, 5. And once that went, and it took out the lower trend line, and that was it. And super low risk to get in there. And
but the key was to wait for the break. And it's the hardest thing to do, but you wait for the break. I mean, I was looking to see, maybe we were going to get an upside break, but I didn't try to trade it in that mess.
Mm-hmm.
And then when we got the downside break, it was obvious, okay, it's not going up. So you got to sell it when you have the shot.
Right. Exactly. So, I mean, it really depends on the trader's style. I mean, you can sell the highs on the way down. I mean, all these trend lines up here were just fine. There was no problem there, right? We had all the trend lines working. So, you could sell those, or you wait for the break, or you can even go to a lower time frame and try that. It wasn't easy because it was, especially if you're watching news and this and that, there's all kinds of mixed information. By technicals, we always talk about technicals always get you through whatever the conditions are. And so the easiest call here, wait for the higher lows to come in. So the point here is, as you get the lower highs, it's telling you that the sellers are putting more and more and more pressure on it, and the buyers aren't able to, hold the line. And the lows they held for a little while, but that was it. And after that low went, that was, here, that was basically it. There was a low here. So on the short term, that's how you get positioned. And when I was talking about lower highs, that's what I was talking about. That's what I wanted to point out. Anything you want to add there, Ben?
Nothing, just that.
Just tactics, I guess.
Yeah, I mean, as you said, the lower highs, and then you could see they couldn't make higher lows on the bottom either. It was sort of a flat bottom as well.
Yeah, here.
That was another tell. Yeah.
Mm-hmm, mm-hmm. So anyway, that's the idea of lower highs or higher lows when you're getting ready to break.
Mm-hmm.
Getting back to the daily. Well, we had, we kind of covered the time frames, time counts from highs and lows, and coming into this low, we had several counts from lows, loaded lows, right?
Mm-hmm.
We had 112 and something, let's say 113, that's good enough. 144, we have a 90. These are all coming from lows, and it's good enough for a bounce. I posted this chart on, on our Twitter feed. And that was this 144 down from the high. So that, I drew this out, I don't know, Tuesday or Wednesday, pointing out that this area, potentially being able to hold some support. and we're getting pretty close to 180 from this high, and it's kind of a flat high, so it's hard to say where the 180 is going to
Exactly. Yeah.
sort of line up. But this is sort of the bracket. I dropped these two red lines here just to keep track of things. Hold on, just so we don't have it. So right there ends up becoming, really the 180 from the high, and giving about 5 days back, 5 days of plus or minus. And because of that, I think we have enough evidence, so to speak, to look for some kind of a bounce. Not to mention the sentiment, right? So
yeah, those are really good numbers too. I mean, 144 in price and 180 in time are really good. I mean, they're significant.
Yeah.
They're significant.
Yeah, it's not exact, and it's not exactly a square, but these time counts have been working fairly well, and I think it's good enough for a bounce, right?
Mm-hmm.
So, and we have a downside. We can get 36.19 might be, I have this line drawn out. 36.19 might be the lower boundary of this, but we're looking for at least the test of this 38.50 area, which we had marked off earlier. So that's if we get some kind of a bounce next week, it's another short week. If we get something 38.50 area, 37.50 first, and 38.50 is kind of what we're looking for it to test. Now, if 36.19 gets taken out, we have a little ways to go, because this 144 comes in. There's only two numbers we can work with to the downside. We have the 72, which we already got to the 144. And if it breaks that, then we're going to 180. That's really where we're going. And that's around, 33.60, let's say. And that's going to show up as decent support, because by the time we get there, this 180 up here is going to be pretty much in line. So it'd be like 180 by 180. So that's something to watch.
That's a perfect square. Go back to the chart you had with the dates and your timing, because I was looking at your dates, 25th and the 11th. I have
sort of a wide bracket,
Yeah. I have some cycle. I'm looking more at your 25th. I have some really good cycle hits, one on the 23rd and one on the 29th, which sort of bracket your 25th there.
Right.
And those are totally different methods than this timing. So that really caught my eye when I saw the 25th, is that, maybe we chop around and bang out the low in here somewhere. Maybe it's not exactly in, but next week somehow we put in a sideways or some sort of correction that ends this move and gives us something different for the next cycle.
I forgot to mention, this is this is not the sun. This says 180 degrees from the high. It's actually Mercury. So this bracket here is the sun's movement, okay? Like Gann would do. So that's degrees of measurement, calendar days roughly, but it's close enough. But the 180 from that high to here is Mercury going 180. Pretty cool, eh?
Very cool.
So we'll see how that goes. But it's good to know these numbers. We need to know. It's good to know where they're coming in, the windows and the levels. So that's why we talk about it. So to wrap up on this chart, if the 144 goes, then 180 is the next stop. It's around 33.60. That's all I have for the daily. That's all. And we're looking for 38.50 test at a minimum.
So is it safe to say a decent summary for you is we're within both price and time windows that could, and I say could, mark some sort of low in here?
Well, not just could, but with the high degree of, with the high potential. So yeah.
Yeah.
Definitely worth watching and trading.
So don't short the hole, in other words.
Yeah, exactly. Especially when it lines up like this, right?
Yeah.
There are other times, all the way down was fine because we didn't have anything really getting in the way. So
right
after breaking that, because we knew that was down into. So 36.19 getting taken out would be really, it'll take us a lot further, like we saw with the 180 degrees down.
Sure.
All right, here's our weekly chart that we've been watching.
Almost got your two boxes.
almost there. So that's what I'm saying. Either we, go up and retest and come back to visit, or we're probably just failing, just get there and get this business done with. So this will be
right.
It's really around. I mean, the box end's about 35.70, but it's really, the number is really 35, 55, 60, right in there. And that's really critical. If somehow that goes, and we got a whole set of new problems coming up.
It's interesting just looking at your ranges here. You got basically 100 points on the downside versus 200 on the upside.
That's right.
So it's the risk reward is reversed from what it's been sort of all year long, where we had, the balance of upside was to the downside. So it's interesting how far we've moved to where that ratio has shifted.
Exactly. Yep. And these boxes measured moves, we just drew out a couple of months back just to be ready for all of this, and it's panning out, and who would have thought, right?
Yeah.
All right, let's go back to charts. Yeah, we're done here. Let's move on to the bonds. Bonds, we left off. Well, this was a zone, and we said, look, if the bonds can't lift off of this level and we get under the square somehow, this 216 from the high, we're going to be in trouble, and we're probably going to see 132 in a hurry, which we did. And now bonds are really in trouble, like we talked about. So, under this 137, let's say 138, super weak. And I think we talked about this 128 a couple of weeks ago. So that's the next stop. Long as we're below 138, keep it short and sweet. Looking at the weekly bonds.
Found some support there. And we talked about that, right? That being support, and weekly basis, we want to watch what happens here. Of course, we can go up and retest and turn back down. But I just want to make sure this is clear so people understand it. So, compared to the weekly, obviously the daily is a shorter time frame, and this is a little bit zoomed in from the weekly version, right? So here we're looking at 138 to be sort of the balance point to tell us, hey, we're going higher. In the meantime, 132 was sort of a target we had. I can't remember how I got that, but it's been there for a few weeks. And coming off the high in 2020, we're looking, after the 216 went, then the next level was really the next half square, which is around 128. Now, if you go to the weekly, what we see is that we did hit the second half square point coming off the high, the same high. But if you come off of here, we did the high to high, we did 72, right? Right here. And then we rolled over. But if you go to that high, then we did 72 down into this low. Yeah. So I'm kind of watching to see how this goes. Whatever the case, we want to watch those rallies into that 138 area to see. And the bonds might push into 140, 141. But this is sort of the thing to watch now. We want to sell the rallies, but we want to keep in mind that it did complete a square on the way down. So that's something to note. Yeah, I'm with you. I'm glad to see your weeklies look like that, because there's some signs from the bond chart that while the monthly is very negative and the big picture is, much lower in bonds, there's I think we've hit a decent low, and we could see a significant counter trend. And your weekly is saying, look, we could rally 7 points and still be bearish.
Yeah. Well, this downtrend is downtrend for a while, no matter what we do here.
Yeah.
And the 72 on the daily, and we got, square and a half here. Exactly. So it's definitely something you want to pay attention to.
Yep.
I think the area we want to watch for that reversal will be 138, needs to get taken out. So we're coming back to that same zone. Okay. All right. Let's move on to crude.
Crude took it in the chops today.
Crude took it in chops.
But look where we stopped.
Yeah, exactly, on the square. And the high came in. I think we talked about these time counts last time. We talked about, hey, there's a 45-day count coming up, so we really got to be careful here.
Mm-hmm.
And that's what that was, right? We had that 45 days going into there. Now, ideally, if we were, if the market was strong, we'd hit that and probably hold about like 115 and then continue to rally. But we did the 45 and that was it.
Mm-hmm.
And so that tells us it's going to be a while, that we might be done here for the time being.
Mm-hmm.
And so 180 up, I have that marked up, is 97. That's the key level to watch. And other than that is really this 90. If we can hold above this, this is the 107. That's the level we've been watching in the past. That was a breakout level up here, remember, on the way up.
No question.
So let's watch that. And long as we can hold above 107, which would be the 90 up from the beginning of this leg, it's okay. It's on firm ground. So we have to look for any kind of a setup to the long side. That's all we're doing, waiting for this pullback to see how we finish, although it was fairly rash, right? Hard.
This last move in wheat on the daily, on crude, looks like the wheat chart. If you go and look at your wheat charts,
Mm-hmm.
There's the same kind of sort of big spike and then a consolidation.
Mm-hmm. Take a look at that.
Mm-hmm.
So here's the weekly, and we're well above this. And we talked about, now I remember we talked about it last week, I think, or the week before, how, the higher we go, the wider the higher the volatility, obviously, and the wider the range is going to be. And you can see how we have, as soon as we got above the square of 90, the weekly ranges are just huge on both sides, right? Swinging
Mm-hmm.
up and down.
Mm-hmm.
And so again, we're back here. 97 is sort of the key level basis weekly that we have to watch. Long as it's above that, I wouldn't be selling this, for example. All right, so that's a level to watch on a weekly basis. And well, here's the daily. That's a 90-degree square. And we'll see how it goes next week. Those are the levels to watch. Let's move on to gold. Not much from last week. We're still squaring around here.
Chopping
Around. We did the 72 down. So my guess is this is really not ready yet.
Mm-hmm.
Let's wait till it finishes up, I think.
Although we did just hit full square timing, so we got to watch to see if something changes.
Yeah, we did that. Yep. But looking at, I was looking at the overall pattern, it's just sluggish. And while in the bigger picture, if we get to the weekly,
Mm-hmm.
Let's see here. We're at all kinds of, cruising very close to all-time highs here. So
Right.
This whole mess is very sluggish, but it's building up to another leg at some point.
Mm-hmm.
And we have to be patient. Now, we were all bulled up on this as long as we were holding about 1881 and we get under it. You can see how we're stuck below that. That's a really good number. You can see how we're sort of stuck below that now, right?
Mm-hmm.
So 3-4 weeks, we're sitting under that. So long as we're there, we're not going to get any movement, but, and we might go down and visit the mid 1700s,
Mm-hmm.
possibly. Doesn't mean it's not a good time to acquire, because I think there's going to be a time when you're going to need some gold. So,
And Barrie, remember in the beginning when we were talking about the ES in that triangle before it broke, making those lower highs. Look what we have here in gold.
Yeah,
making the higher lows.
mm-hmm.
It's a visible pattern of higher lows on a weekly basis. So
Exactly.
when the break comes, look at the length of that triangle. It's going to have a lot of energy behind it.
Mm-hmm. Yeah, there's a lot of compression, and it's going to go when it goes.
Mm-hmm.
As long as it's about the 1767, it's okay. But long as we're below 1881, we're probably just going to continue to wrap around and consolidate. So you have to watch your systems and be careful there. All right, moving on to the dollar. We ran into the 90 that we looked at a couple times, and what else did we have here? You guys know we've been bullish and still bullish. So
structurally, it just looks fabulous, doesn't it?
it looks good. And I'm thinking we might get 3 drives, which would be just about perfect.
Mm-hmm.
If we can manage that. But we did the 90, so we got to kind of pause here and wait and see.
Yeah, see how it deals with that.
Yeah, and I'm really watching this trend line. So long as it's above that, we might go back and tap it, and it's possible that we finish this up in 3 legs. So 3 drives or high could have a chance here. We'll see that. And looking at the weekly dollar, so you can see the weekly we had, here's the first drive, second drive, and the third drive can get to the half square right there. It would be just about perfect. And that's around 106, 107. And our measured move would be more or less satisfied because that's pretty much in the range. So we're good there. Yeah. So dollar's still bullish. We're getting close to the end of this leg. We've been bullish for years. So it's just we're getting closer, and you can tell. You can see the big pullbacks, the volatility is up, and the ranges are big. So we're getting there. And you have to rely on these. As you get closer to the end, you got to watch your trend lines and watch the smaller little squares. And we did hit a 90. But it's possible we go a little 8 more and get to the 107. That would be a classic move to get up here. We'll see if we can do that. And the euro, well, this 180 is the thing we've been watching. It's a 105. Let's say 106.
Banging right up against it.
It's after we broke, and that was our, we call that to be the resistance now, and we've been sort of below that, tapping it. So I think long as we're under that, it's weak. We could even go down and test the next half square, which is around 101, unless we are able to get above the 106. We'll leave it at that. And the weekly euro, again, it's still weak. I feel like it hasn't quite hit a good mark. We had the 72 weeks down. And, this is not really the kind of weak price action you want to see. If it's really squared out and it's on fire coming out of the hole. It's not doing that. So next half square down is around, 102, 101 something and change. So it's still weak. I don't think it's ready to be bought yet. Well, that's my round. And let me put it back to you. And you guys, if you're new, go back and look at some of the older shows we've done. That way, you can catch up to what we're talking about and keep up with the story. And if you like our work, please, click likes and share, and also subscribe. That helps get the word out. So,
absolutely.
On to the NASDAQ.
On to the NQs, which has been the weak sister in this decline. The first thing I want to point out is, you and I have been talking about timing, and we're looking at, do we have anything decent here? Let's just look at this whole decline and see how well the squares were doing, timing it out. This is a square of 38. I use weird numbers for squares. I kind of try and find a fit and see what the market's vibrating at. And this is a square of 38 for the NQs, which if you double it, gets you to 76, which is close to a 72. So it's just call it a modified 72. So this full square timing wise, was 2 days off from catching the all-time high. We came down here and we caught sort of the first low of this plunge. Then we go down here and we caught this cluster of lows right around that, this full square timing. And then that really sharp counter trend we saw in March, highs came in right around the half square. The low off of that retrace came on a full square.
Yep.
Recent low on a half square. And now we're coming into a full square here, timing wise. So we have, you can see from price, we've gone, 1, 2, 3, essentially 4 full squares, probably 4.5. So we've got some price and time here. This is coming up on the 20th, which is a holiday. The full square is right there on the 20, looks like 21st, 22nd, which is pretty good timing.
Mm-hmm.
So, I mean, I think some things are in place here for a bounce. The issues we have are we got to get above this full square here, which is, call it 11,500. We get above that, then the next big test is up here, at around 12,750 on a full square basis. But I'm intrigued because of the timing. This from low to high here was 23 daily bars.
Mm-hmm.
Low to this low would be 23 daily bars, if we make some sort of low in this 21st, 22nd time frame. So watching, this is obviously weak. Would love to see some sort of ABCD up into, full square or half square that we could sell for the next wave down. But I think at this point, we're looking likely that we're putting in some sort of low here that's going to give us a retrace to the upside. Anything you have here for NQs you want to add?
Well, we had a square of it squared out from the high. We were down 90 degrees, so we do have some support.
Mm-hmm.
And we had some timing, like we looked at on the S&P. So, there's enough there to look for something, and definitely, certainly enough there to, cover any short-term gains.
Right.
To the short side, I should say.
That's right. Yeah, I think the message that both of us are trying to send this week is this is not the place to be initiating new shorts on ES or NQ. Definitely not saying, oh, let's go all in long because, the new bull market is starting. Not at all. That's not the message we're sending. It's just that there is price and time that's coming in here, which could give us a decent bounce or some sort of counter trend, which we would look to sell at the right spot and time because, neither one of us is of the mind that the bear market is over. Let's jump over to a couple of commodities to take a quick look. As Barrie mentioned earlier, the feedback we get from you guys is great. So please, make comments, give us likes, subscribe, click the thumbs up and the bell and all the stuff that they have on YouTube that would be really helpful. So let's jump over to corn. Corn looks interesting to me from a standpoint of we made this high back in April-May timeframe, pulled right back to the full square, held on this full square, which was in an area of previous support and previous lows. We bounced back up, and now we're pulling back and stopped right on a full square. What I'd like to see on this pullback is, we can hold here, which is the half square, or make a higher low than this. And I think that will give us a decent setup for, a potential move to new all-time highs. I've been watching the lower time frames, the 4-hour and the 60-minute, and there's some good things happening. It all depends on what we see on this next pullback on corn, where this low comes in. If we just stay sideways and stay on top of this full square in the, call it 783 area, that would be super, super bullish. If we pull back into here on the half square, or we can make a higher low, it gives us, again, encouragement that we could see a decent move or the next move starting up in corn after a 3-4 month pullback we've seen here. I know the other grains are correcting, and I am going to take a second to look at soybeans as a good example of what the squares can do. Anything you have to add here on corn, Barrie?
Well, just to notice that, the hard leg up, the strongest part of the leg is done. And now we're sort of in a sluggish fourth wave-ish kind of a move. And the critical thing here is to really, like we did, we talked about for the S&P, you want to wait till it finishes up the consolidation and look for early signs of a move starting again, right?
Mm-hmm.
So that's the idea. And that's what you're calling out every week. And so these are potential points, but we haven't entered a leg yet. So these are early signs.
It's sort of a yellow light if you're thinking about a traffic light.
Exactly.
It's not green, and then we're definitely not red, but it's yellow now, and it has me looking, it has me watching, and I want to bring it to your attention.
Exactly.
So I mentioned soybeans, and the reason I wanted to show you this is because this is a good sort of educational thing about the squares. A couple of weeks ago, we were talking about how this consolidation was defined by this full square, right? On the top, we topped out here, and the lows were all finding support on the bottom of this full square. Well, we had a nice move up, and about looks like a week and a half, 2 weeks ago, we had a close above the full square. And I brought it to everyone's attention and said, we want to watch beans, because if we can, see a bar that closes above this full square and we sort of build a base right here and bounce off this full square, then we're going to be heading up and out to new highs. If not, if we fail, it's right back into the consolidation. But you can see what happened. We had that close there. We opened the next week on Monday or Sunday night. We opened, above the square. We closed below it. Next day, we opened below the square, couldn't get above it, and so we lost the square. So this then became a false break. So now, why I'm not highlighting soybeans. Hey, watch it. The next bull leg is about to happen. But I'm saying this is how we use the square and watch these points to give us clues as to what's coming next. If we sat on top, or if we could hold, this full square, it would have been up and out and ready to go. This is telling me that the correction and the consolidation and this fourth wave action has more to go. Any other comments? This is basically for educational purposes. Anything else you want to add here on beans, Barrie?
Well, I think you covered it pretty well. The only thing I would look for the short term would be watching that half square to see if we can hold above it, because one of these days before it runs, it's going to hold above it. And
That's right.
So, yeah.
I mean, you can see the structure here, right? We went
Exactly.
above it, pulled back, and then got the launch.
Yeah. Mm-hmm.
So again, not highlighting soybeans to look at buying, but just from an educational standpoint.
Mm-hmm.
All right, let's go to the last one we want to look at, which is coffee. Coffee is, I believe, in a fairly strong position. We've been talking about this one for the last 3 or 4 weeks after we got these clean out lows that sort of took out all the stops here on the full square, reversed up, held the full square, came up to the half. We weren't able to hold the half, but we've pulled back and made a higher low, and now we're pushing higher again. I think coffee, although we're in this, 6-month, 7-month consolidation, is showing those signs of higher lows that usually precede a strong move higher. Coffee, to me, looks to be ready to go. The key level here is this half square. Call it the 231 area. Closes above that will be bullish and give us the strength to attack, the full square in 250. If we get above that, then these all-time highs are going to go, and we should go challenge, this upper square and the 290 area. 290 to 300 coffee is what I'd be looking for on this next push up. Anything else to add on coffee, Barrie? I know you've been bullish on it for the same reasons I have. What other perspective?
Yeah, well, for the short term, we need to hold the trend line and try to get over that half square.
Mm-hmm.
Now that we broke out of the little bit of triangle there, we need coming back for a check. So at that point, it's critical we hold the line.
Absolutely. And again, going back to the triangles, we're above the apex of that triangle, which is right here.
Mhm.
So that's bullish. As long as we hold the trend line and that apex, it should give us the energy for higher prices.
Yeah.
That's it for commodity land this week. I think we saw a lot of liquidation, not only in the risk markets, but in commodities, and there was cash raising, just sort of selling to sell and raise cash in many markets. So we'll be watching these commodities closely as the sort of mini panic for cash subsides. We'll be watching to see how these charts like corn and coffee and other things that were correcting and are showing higher lows react and hopefully give us the strength to break out and give us bullish chart patterns to attack. Anything specifically you're watching this week?
Wow, man, plate's getting full.
For sure.
And it's June. Well, I'm watching. Well, other than we're watching everything, but mainly to see if the indices are, if we're going to turn on these time and price windows here. So that will be it. First priority.
Excellent. Well, everybody, hope you have a good week. Enjoy the long weekend, and we'll talk with you next week.
All right. Good job, Ben. Thanks.
Thanks, Barry.
Bye-bye.